Hello traders. Today is the 4th of February 2013, and the time in London is 14:09. In New York is 09:09. Okay, 9 minutes past 9 a.m. in New York. Okay, and this video is about the formation of a flat correction. Now, in the previous video that I recorded today, which we call flat correction, we were talking about when and where can we see a flat correction. All right, what is also a running flat correction. All right, very important. Now, in this video, we will talk about the formation, how the flat correction is formed. Okay, we want to know the formation of a flat correction, Elliott wave flat correction. As I explained to you in the previous video, I was telling you that, all right, we should see first, a trending phase, which is the motive phase. Price should be either in a strong uptrend, or a strong downtrend. That's the first condition for a flat correction, because a flat correction will take place after a strong move in the uptrend or a strong move in a downtrend. So there is quite strong. You can see here some tall candle here. How you see vertical progression from here. So there was a normal progression, and then there was a strong vertical to this level. This is a strong move. We are likely to see a flat correction, and it is being formed here for this stock called MMM 3M company. My apology for the noise. The 3M company, number 3, letter M, 3M company, it's listed on a Dow 30, the epic is Mike, where my cursor is. So we have the strong first. What I'm going to do, I want to highlight the strong first, so the price went up from here to this point. This is the strong first. The next thing that we usually see when the flat correction is formed, we will see the price after a strong move, the price will pull back down into the zone of 50% and 61.8% Fibonacci retracement level. Not always, but very often. All right? Remember the theory and the reality of the market. Because we don't want you to make mistake, or you learn something by your head, but you will, if you fail to apply your heart to it, you may make a lot of mistakes. All right. So it went up from here to here. You see, where is it? The 50%. Let me draw the line for you. Maybe you may not see on your chart. It's the 50% retracement level. Let's color them into blue because you can see them clearly on your chart. Okay, and the 61.8% Fibonacci retracement level is here. Color it also in blue. So you see the price. You see this one came and touched the 50%. The second one said, no, it must go to 61.8. This is the smart money. The force it. All right, as the price opens here, they say, no, we don't want 50%. And they dip it a bit below the 61.8. So instead of going up straight away, down, and then we push it back up. Okay? See how? So this is the formation, how the flat correction is being formed. So we will say to ourselves, in this case, the flat is a corrective move, which is, I'm going to color it now in black. Okay, so from here to here, that's the A corrective phase for a flat correction, because the flat correction is A, D, C. All right? We don't know whether it's going to be a running flat correction or an expanded flat correction. But it's not, a classic flat correction. You can see something has happened here. Traders were selling here because they were expecting a classic flat correction. So they sold it for one. We are on the yearly chart now. So they sold it for 1 year, almost here. These are traders asking for a flat correction. So they see this move down. They say it's a classic flat correction. They want to sell it here to bring it down somewhere here. But you can see, this is what we are talking about. The fundamental, probably this, if the company is strong, if the balance is strong, if the management is excellent, if they are dominating the market, if the market cycle for that sector is bullish, if they are increasing their market share, you may see, you may expect to sell, but they probably just go up, ignoring people, creating instead, either a running flat correction or an expanded flat correction. So this the classic flat correction has been denied here. You see, so now the price exceeded. I will remove this one. The price exceeded the starting point of the A corrective move, which I explained to you in the video that I titled Flat Correction. All right, it exceeded the starting point of A corrective move, so we are thinking of what? Either a running flat correction or an expanded flat correction. All right, but where is the B will end? Where B will end? The B corrective move. Use Fibonacci extensions. All right, because you can see that the A pulled back into the zone of 50 and 61.8. The normal Fibonacci extension zone we will call 127 and 138. I would prefer 138 because you see, traders are always greedy. When they reach 27, 127, they will say, oh, why not 138? So I'll position myself between 127 and 138 as a target. So let me remove some of my line. I won't remove all of them. I leave my 50%, 61.8 there. I want to now use the Fibonacci extensions. So my 127 projection, we are approaching it now for this 3M stock, American stock, in the zone, the 127 projection in the zone of 105. Some trader will take profit there. Some trader will start selling aggressive there. The 138% Fibonacci extension zone is at a 113. $113. $113. That's the target for the 138. That's what myself. So some trader will start selling here at the level of 127% Fibonacci extension level, which is at $105. They will place their stop loss above. These are deep pockets. Market participant place their stop loss above, the 138% levels. In my view, there's a high chance at this store because you can see that it's quite bullish, and people were selling it big time here, and you just ignore them and crash out. So there's a high chance that when you see something like this, the way you see they were sell it big time for 2 years, but look, you just ignore it and continue. So I doubt that he will stop here, because looking at what has happened before, people who will try to challenge them, they will force them out of the way. My conservative or cautious target will be in the zone of 138% Fibonacci extension zone. So bring in the price, so we can use this stock for day trading, day trading purposes, using TSTW24 or TSTWSY-S008, and just taking it step by step, even for swing trading, because there's room. The price now at 101, and so the first target is at $105, and the greediest target at $113. So there's a room for this stock, the 3M, to continue the movement to the upside, which line will be, I will use black again, to this zone that remains to be seen. When that is completed, that will form the B corrective wave of our flat correction. So A from here, let me put a line there. I don't want to repeat myself about the flat correction because I posted a video already about what is a flat correction. So I don't want to repeat myself again. So here is the A corrective move. We are expecting the B corrective move. We are now in the process of forming the B correction. So we expect it to come into a zone of $113 zone, which is the 138% Fibonacci extension zone. Looking at the past, what has happened here? it looks to me that this stock has a high chance to form what I call, okay, a running flat correction, which means the price, that's my own estimation, do not bet on it. There's a high chance that the price will fail, okay, to go below the end of the A corrective move. This is the end of A corrective move. This point is the starting point of the A corrective move, which is this section here. The C correction, I expect it to fail to go below this low here because the stock looks very, very bullish. But do not bet on it, okay? This is the low here. I believe the price will come down a bit and stop just somewhere here, giving traders another opportunity to buy around the zone of the C. These two tails here, these are support zone. So in fact, I'll move it somewhere here in the zone of 70. All right, that remains to be seen. If the 70 fail to hold it, it may try to come near this level, but I doubt that it will violate it. If you violate it, it will be instead an expanded flat correction instead of, okay, a running flat correction. In the case of the running flat correction, as I explained to you before, the C corrective wave, which can be divided, the C corrective wave can be divided into 5 sub-waves. In normal condition of a running flat correction, the end of the C corrective wave shouldn't go below the end of the A corrective wave. All right? These are the criteria for the flat correction. So we have a flat correction in process right now because the first condition we must have, okay, 5 Elliott wave or a strong uptrend. Price very often will pull back into the zone of 50 or 61.8%. Do not just jump on it and use it as a sign, because I don't know how some traders, their mind function. Maybe they have done, I don't know at which subject. They use things, okay, exact. They read the book, they say that's what they said. They say when stochastic is overbought, sell. When they say the RSI is above 90, sell. But it's not like that. Human being, news, okay, are changing. Things are moving. They say when exponential move around 20 cross 50, buy. But sometimes when 20 cross 50, you can perfectly sell. I know that. Okay? But people are just using things and say, yes, it's not 1 + 1 = 2 in trading. It's just being flexible, paying attention to the price itself. This is an invitation to buy. We see that they move from here, understanding what's taking place. This is what we are talking about. Understanding. That's what I care about, understanding. I can spend the whole day trying to understand one subject. If at the end of the day I understand it, that's a progress. But you can just go around making decisions anyhow, do your own thing. And, I mean, that's not a progress, okay? That's why we have websites for traders. So they may go and watch these carefully prepared videos for them where they can learn and improve their knowledge and they can make excellent decisions. There's no magic. So you probably, okay, in fact, that's not what I want to do. I'll remove. So we are talking about how a flat correction is formed. Okay, so we see that the price went up from here to this level. Okay, so you see it went instead like this because the price doesn't go vertical, but in fact it went from here to here, but in a diagonal move. Okay, so this is the range of the trend. All right, as I explained in the previous video, I want to do it again. So pay attention carefully. Use the yellow. Can we see yellow on this background? Okay, let's try yellow. Can you see? I can see maybe. So this is a higher low after a strong move. This is an invitation to buy. You see? Look at the target. So traders were that way here know how much people they made. Once they receive this invitation here to buy, which they already responded to, they will expect to achieve this line, which bring me into the zone of 113. So the greediest target will be 117, between 113 and 117. If we stop halfway to this level, that will be quite a weakness in the previous bullish momentum. Okay, I will not continue too much about this discussion. I'll stop here so that the video is not too long. This is about the formation of a flat correction. I hope you have enjoyed this video, that you will put into use, okay, to make excellent trading decision. We are the TSTW SYS 008 traders. Speak to you soon.